So basically, on that day when I shared this play, the market rejected. I didn't look at it, and it hit the stop loss. Somewhere around here was the stop loss. It came back down somewhere around here. I came back home to my computer, and I was looking at what time was it? Let me see. This was around, sorry, the next day, 5:11. But I remember playing this on the trade chat with, or Nora was doing it. Nora was guiding it. Nora, was it you guiding it that day on 5:10? Yes, that was you. That's where you called the reversal here. Very nice. And 2 cents contract over here flew to like 22, 28. What was it? So this was that day. So this was a nice reversal play. Now let's zoom back out. This was right here. So remember that SPY was playing a break of a downtrend. This was 2 weeks ago. It was playing a break of a downtrend, and then it broke out. It broke out, it consolidated. The right thing to do was to play calls by the books. Okay, any trader who took the calls here got faked out. You could see that the past few days where the market tricked people. Now, a normal trader will look at it as consolidation, right? But we experienced the market this past few days, and we saw that this was no consolidation. On the bigger picture, it looks like a consolidation. But here, the right thing to do was exactly. But again, here, this past 3 days, I basically mimicked all this. And it worked like a charm. How? So here, like I said, there was a breakout, break of a downtrend, consolidation, broke out. This was supposed to keep going up. But because it failed, it came back down all the way to, I guess Nora traced it to 2 days ago, pre-market. There was a rejection right here. You saw that? When SPY cracked, came back down, reversed, rejected. So she traced this line, and this is where she found the bottom. All right. The next day, obviously it came back up. The next day, it rejected these highs. So everybody in the community, not everybody, but most, I don't want to say names, I'll call them the cash accounts. They played puts that day. Obviously, you don't have to be a genius to know that there's puts playing that day. Okay, so now let me give you an example of why I like the reversal better. Okay, this is 9:30 a.m. right here. It opened up. How often does the market open up and just knifes down like that in one shot on a 1 hour candle? Very rare. It's usually a candle, a half candle, consolidation, half candle, consolidation. So a day like today, or sorry, a day like this wasn't predicted. Now, let's say you knew that this was going to come a little down, right? As a trader, will you go heavy here? All the way down? Like what? Like you don't know it's going to go all the way down. Would you go all the way in as a full position here? Let's say right now it's 9:30, the market's starting to dip, and the options are at like $1.10, $1.30, and it's starting to go up to $1.80, $1.90, right? And then 240, 250. Will you keep adding as it's going, or will you be taking profits? This is common sense, guys. I want you to unmute your mics and answer me. If you started position on market open and the play is going in your favor, are you going to keep adding or are you going to take profits?
Take profits.
Good. So from here, we already understood that you can't go heavy. You probably went with a starter position. I'm not talking to anyone in specific. So no one will ever go heavy here because you don't know how far down it's going to go. But when you're setting up to a reversal and you're adding dips, all right, I'm going to show you a chart. I'm going to show you a chart that I shared the other day as an example. So I want you to understand what I mean when I'm talking to you about reversals and why it's more than just a regular play. There it is. Can you see the screenshot? Okay. So let's say, forget about all this. Let's look at it from here. Let's say this is market open. You went in and now it's just going. You took your profits. You're done. Now, let's say you're setting up for the swing and you're eating the dips on the way, on the lower levels. Sometimes you'll eat the dips here and set up for it. You'll come back down again. You compose yourself for an hour or two until the setup comes because your mentor is yelling all day. A big reversal is coming. I'm putting up a Godzilla logo for you guys for a reason. And the reason I do this is because I've gotten a lot of requests in the past of, Yossi, can you please let us know when you're going heavy next time? Yossi, can you please let us know when you're, when a big play is coming so I can go heavier? Or I never did that before. But lately I'm giving you guys clues. I'm not supposed to be doing it. And all my one-on-ones, all my mentees, people that learn with me, they know how I am. They know my lingo. When they see these little signs, they wait for it. They look for it. Before I used to throw a nice verified check on it. Now it's more like a Godzilla. Anytime you see that little Godzilla logo, just know that something crazy is with that play. So would you rather scalp a play on the puts, or would you set up, eat the dips, and come up again? Do you know how do you know the difference of do you know the difference in your P&Ls between here to here versus here to here? So let's say if you added here an amount and it's going up and your profits are going from 50, 100, 300, 500, 800. If you set yourself up from here, you buy the dips and you wait for the setup, your P&Ls will be 500, 3,000, 5,000, 10,000, 20,000. Do you understand the difference of the numbers I'm talking to you guys about? No matter the size of the account you have, whether you have a small account, a big account, this is how you compound accounts. So if I have to wait 5 hours out of the 6 hours of trading day just for that one trade, I'll do it. It's common sense. It's for my best interest, versus me going and trading on my own and being happy with $200-300 and not really getting anywhere. Because I know some people who are trading on a cash account for months, and they're still stuck in that same digit. They started with 5, they come up to 10 to 15, they come back to 5, and then they come up again. It's a repeat and repeat and repeat. There's always a reversals throughout the day. You just need to know how to spot them. And if you can't spot them, hold on a second. Someone is in the lobby. Let me bring them in. What is this? So until now, did we understand the difference between a small little scalping move versus setting up for a play? And sometimes setting up for a play is not 5-10 minutes. Sometimes it's 2 to 3 hours. Sometimes you're going to have to cut your little position that you're holding on the option and drop or pick up a strike. I'm talking to the options traders right now. If you're not an option trader, ignore it. Okay. Same thing goes with equities. You know what I mean? Like you can, it's all about risk management. You start small, you secure small profits on the way. And when the setup is getting more and more clear, you can start going a little bit more heavier. If it's not going your direction, reduce it. Remember, this process, you're going to either cut some losses along the way, but once you get to where you want to get, it will bring you back all that losses plus a lot of profit. So if I'll give you an example, I'll talk to the $5,000 cash account people, okay? Because I know that some of you guys are probably, you know, you're not going to take it well if I talk about a 20, 30 grand account. So if I had a 5 grand account and a day like this comes and I'm going in and I'm putting up an alert of, let's say right here, where was it? This day. This was 5/11. On 5/11, what time was it? 5/11. There you go. I'm looking for the play. Okay. So at 5/11, I put up at 9:40. I put a 4/11 call on watch, which is right here, 4/11. And this is the line for 4/11, obviously. And then I remember I switched to 4/10. So I was holding some sort of position on, I was playing that day with like 4 or 5 different accounts, a 3 grand account, a 10 grand account, a 50 and a bigger one. So I dropped the strike. I was holding some calls from 4/11, a few contracts. I remember the $5,000 account, I cut like maybe $600 of contracts in loss. And I dropped the strike to 4/10 because I did see some sort of bottom from the previous day where Nora caught the bottom, somewhere around here. You see, this is the day where Nora caught bottom. She gave you guys the reversal. So when I saw the candle close, which is right here, and I used that as another bouncing area. Now, sometimes these candles crack. Now, this is the 1 hour chart. Sometimes the 1 hour can form a candle down, and sometimes that candle could start wicking up again because the smaller time frames are obviously in progress. They're moving. There's breakouts, reversals, break of a downtrend. You know how it goes on the smaller time frames. So when that happens, when there's a small reversal during this 1 hour, it's going to start waking up. And when I see something like this happening, I'm comfortable going in heavier. So that's when I start putting into, I said at 9:57 a.m., I said switch, 9:47, I said switch to 4/10 call, $1.40 starter. And then I said, if SPY keeps dropping, we're going to change our strike to 409. But I don't want to play puts that day. It held. I stuck to the 410. And I added heavier at 9:57. I added heavier with a tight stop loss right here. So this was a beautiful bottom. You know what I mean? Like, that was confirmation for me to go in heavier. On the way up, that $5,000 account brought back the $500 that I took a hit on the previous strike, and I doubled the account. It's that simple. Now, not every day the market's going to present the same opportunity. Sometimes it's going to change. Sometimes it might be in midday. Sometimes it might be to the put side. Sometimes I play the opposite. You know, I don't listen. If you have a $1,000 or less account, you're going basically back to anyone with $1,000 and below account needs to play by the old-fashioned rule, where you go in with 1% of your account, or obviously $100 a play, and 50% stop loss. You can't really manage your risk in that account. Or I would go in with, I would play that with that account on one trade and one trade only. And I need to make sure that trade is perfect, or else I might even burn the account down. So if I have a nice play that I see Yossi's writing, I'm going in heavy, or, you know, like he's giving you confidence, go in a little heavier. You know what I mean? Like, but again, don't just go heavy because I said heavy. Go heavy with an amount that you're okay, even if you lose. It's the stock market. In the stock market, there is no guarantees. It's all about managing your risk. 1K account, if anytime I say the word Godzilla, and you see me saying I'm going all in, and you have a $1,000 account sitting somewhere that's collecting dust, you could do it. But if your account is $1,000, I suggest you playing very small. Play one contract at a time. Don't rush in to take the alert. I would suggest you, if you have $1,000 account, focus on Ferris alerts, because Ferris alerts, he just posts it and he lets it ride. I don't do that. I don't do that anymore. I used to post those kind of alerts where I would put an alert and just let it run. Like, I used to post 20 alerts a day back in the days. 3, 4 would fail, or 5 would fail, or 6 sometimes would fail, but majority would always hit. So the same thing. So the same thing goes with today. You know, like, if you have a small account and you can't afford to take losses, trade the old-fashioned way. Okay, if you have $5,000 or $3,000 account, you should start doing risk management. $1,000 account, I only recommend managing your risk if you are more of an advanced trader, because $1,000, the smaller the account, the harder it is to do risk management. So you have to look for really good entries. Don't just go in on any play. Okay, and I don't recommend taking any options more than $1.50, $1.80 on a small account, unless you know for a fact that it's a bang. Okay, please, guys, common sense. I don't want people going in tomorrow and saying, "Oh, I saw you say the word Godzilla, I went all in." Don't do that. I don't want you to FOMO on my alerts. I don't want you to FOMO on anything I say. Take every alert as if you're as if you're, you know, like trading a regular trade, and the bangers will come to you, I promise. Okay, so that day I remember playing calls. I could zoom in. Let me just see what day was this. This was the second day, the 11. Okay, so 1 hour, we're gonna go to 30 minutes. So I remember here we played calls again. It came down, kept going up. Every dip we bought just kept going up and up and up. I don't just buy here and sell here. I buy here, I take a lot of profits here, I buy again, I take more profits. Sometimes I'm like, oh shit, it's not coming back down anymore. It held. I'm adding even more. I'm FOMOing here. It looks like I'm FOMOing, but in reality, it's just another support. So I'm riding up. So if I added here at $1.50 and went all the way up to 2, came back down to $1.40 or $1, I bought again, sold it at, let's say, 250. It came back down to 210. It looks like I'm buying at the top, but I'm not. I'm buying it at another support. So from 210, boom, all the way to 350, 450. You understand? I don't want you to. I don't want you to trade like a beginner mindset, which means don't look for the cheap average. When you're trading options, you're trading volatility. So if you see the volatility coming in your direction, you're not FOMOing. But again, don't go too heavy and don't go with an amount that will cause you to give back your gains from here. Okay? If you went in with $3,000 here, don't go here with $3,000. Go here with $800. Every time you go into the trade again, go smaller and smaller and smaller because you don't want to give your gains. Now, if you see another setup coming, you can play it. And that day, I remember there were puts playing. I did not touch it, or maybe I did. If I go down, I could definitely take a look. But I do remember at some point, I said, what time was this exactly? This was 1:30. So let me scroll to 1:30. 220. Okay, so at 227, which was right here, I saw the reversal coming. It held. And that's when I put in a call at 411 call at 79 cents. And that thing went up to $1.50 and kept going. Basically, from here to here, we played very nice. So again, here I saw the potential. I was able to go heavier. I was able to bring up my position sizing versus market open. Let me take a starter position, or let me go all in on my cash account and scalp it here for $300-400 and I'm done for the day. You understand my point now? Why reversals can make you more? Because when you do risk management and you watch your levels at the same time, and when things go in your direction, every dip that you bought will just flourish. You know what I mean? So if you're in with $2,000, your $2,000 will become 4, or maybe it's going to become 6. You just need to have proper risk management and proper guidance. And please don't try to look for that $10,000 a day play. Just play by the rules, and I promise you, your profits will just become bigger and more consistent. Again, so that day, I remember we played. I remember in the morning again, it rejected the pre-market high of here, right here. It rejected the pre-market. So obviously, here was a nice puts play. You see how there's so many candles on the way down versus one candle on this day. So here, if you risk managed, you did well. But if you are an experienced trader and you know the mechanics behind volatility, even though that day puts did really good, okay, I still managed to do more on calls than on puts. This was the Friday, I remember, and I'm gonna zoom into this day. So here I remember playing. I wasn't playing here. I came to the market on Friday around 10:30. if I'm not mistaken. And I remember catching dips here, playing it up, catching dips here on the calls, playing it up. Okay. And then over here, I already started letting you guys know that there's a break of a downtrend forming. How many of you remember that I wrote it on Friday that, hey guys, there's a break of a downtrend forming on a bigger time frame? For those of you who don't know what a break of a downtrend is, it's basically when the stock goes down and it's trending to the downside. You see this yellow line right here? Let me make it a little thicker. So once the stock breaks out of this wall, it's called the break of a downtrend. So you see all this move right here? I remember playing this one. I remember playing this one. And I remember banking really good on this one. So this move right here, from here to here, if you knew how to manage your risk the right way, you would have made more than all the puts combined throughout that whole day. Those two charts I posted on my channel on Friday, where things went all the way down to the bottom and went even higher than what they were. Here, I'll bring up the chart again. So here, there was a second play here. There was another one right here. You see throughout the whole day. Give me a second. Okay. We're gonna have to finish this really soon. It's getting late, but I want to get down to the point. I want you guys to understand something. So I remember this day buying the dips, selling rips, but I wasn't so heavy. This is where I started to let you guys know that there's a break of a downtrend and a bigger time frame, which is this. So here again, I went a little bit more. Obviously rejected on the bigger time frame, and it came back down again. And that's when I stayed in front of a computer. I stayed till the end, and I bought every dip on this, on a small account, on a big account. And I took an amount that I was okay letting go, just in case it didn't go the way I wanted to. I did not FOMO my whole accounts. And at the end of the day, every little dip that I bought ended up going higher from the average. So yeah, I started here at 60s, at 40s, at 30s. And for a minute, it looked like my money is going to hell, because it went all the way down to 26 cents. 26 cents is $26. Okay, for those who don't know. So this is where I bought most. Now, most beginner traders have a physical stop loss. Now, you see this thick dotted yellow line at 40 cents? Let's say you're a beginner trader and you're focusing on the 1 minute chart, and look how many times you would have gotten stopped out below 40 cents. But when you have a bigger picture in mind and you know where you're aiming for, okay, let's say I have about 4 grand of tolerance that day, and I know it's happening. I'm gonna play no more than 4 grand. If I have a 2 grand account and my tolerance is 500, I'll risk the 500. You know what I mean? If I lost, I lost. But the play is good. This is a setup. A break of a downtrend happens every day, whether it's to the upside or the downside. As a trader, we can make money both ways. Okay, it just happened to be that the market presented to us some nice break of a downtrend for the past few days. And frankly speaking, it's kind of worrying me because it's starting to look like a consolidation. And on the bigger time frames, it's not looking so nice, even though it most trader thinks it's looking like a big breakout coming, and we're going to talk about it a little down the line. So yeah, this day was a nice play. And again, today, I remember I wasn't active on market open. At what time did I come in today? Today I came at 10 o'clock. 10 o'clock was somewhere around here, right at the bottom. And I put the 410 call on watch because obviously the day before we held with the 410 call. So I wanted to stick to the 410. You want to be as close as possible to the dip. So if SPY comes here, don't play 409. Because 409 volume is not the same. The volatility is also not the same. Stick to the 410. If SPY is going down, play the 409. You know what I mean? But if the day before held above, the volatility here the best will be 410 if you take it here. So like I said, yes, we held here. We held here from yesterday, obviously. Anything above this area would have been nice. You know, it cracked from here, came back up and broke out of it. So this is the area I would like to see and watch for support. So as SPY's coming, I let the bears have their share. Okay. But when I'm aiming for a bigger picture, I'm allowing myself to go heavier here on the way up. So if I had a $3,000 account and I scalped it for 300 and I'm done for the day, over here, if I scalp with the $3,000 account, I would have had a lot more than 300 because I know where it's going. It's more clear. The picture is more clear to me. And frankly, it looked like we held here. Okay. But we really held here, which was pre-market consolidation. Right about here. Oh, see, it broke out, held, broke out again, held, and continued. This is why you can't let the market fake you. If you had a regular stop loss, a normal trader stops out right here. The books tells you to set your stop loss here because it's a support. But if you have a bigger picture, I'm back in town. Oh, Mr. Boots Printovich is back. Okay. Let me just put this on. So until now, was everything clear to you guys of why I played the way I played this past few days and why I would not venture off on my own for $200-300 a day when I can see a good setup coming and make more profits? So sometimes jumping in the first one into a trade isn't the best option. Sometimes waiting, sitting back, letting the market figure itself out, wait for the setup to come, snipe it, and take it home. You know, it's not that complicated. You guys are making the market too complicated. Everyone is sitting and doing their own little thing, and then they screw up. They get lucky a few times, they screw up again. So right now, I want to see all these little cash account guys turn into 25 grand and up accounts. Now, another thing I've been noticing this past few days, I'll pick it up and I'll show you. Okay. Are you guys watching all this? So this past few days, right, there we go. This past few days, every time on market close, I've seen a big pump. This is a big pump right here in the market. Market gets a pump and then market open we just see a bunch of sell-offs coming. Market close, we see another pump coming. Market open, no bueno. All right. Again, market closed, I see a big buying order coming in. So tomorrow, if we see another big green volume bar coming in the morning, we're going to see a breakout coming in. Okay. Don't say I didn't tell you. But I'm watching this. I'm watching the volume in the markets lately. It's not the way I really like it. But take a look. The last 3 days. I have more indicators, more clear indicators here, but you know, some of you guys who are venturing, you know, you're going in blind. You want to make big bucks? Just wait till we get online. Get your account over 25, and then you could, you know, allow yourself to venture. Small accounts, please have common sense. Until now, anyone have any questions about what we spoke? Anyone have anything to ask? Ask me now so I can move forward.
Just great explanation, and felt you like you spoke directly to a lot of the issues that I'm personally experiencing, which is the venturing and not having patience. So that helped out a lot. I just have to.
I couldn't hear what you were saying. You said you heard about what? You were
Act
breaking
on it. Can you hear me fine or no? If not, I can just type it out.
I can hear it now.
No, I was just gonna say it's a great explanation of what you just went through, and spoke a lot directly to a lot of the issues that I've been running into due to my own lack of patience and discipline. So I'll try to wait on the plays as they come out from one of you guys and go for the bigger profits instead of trying to make the little small profits. That's exactly what I've been running into. It's making the small profits with a small account. It's good for a couple of days and then it goes back to shit. But I still try to keep on going at it. So I just have to stay patient. That's just my feedback.
That's good, man. Listen, again, I want to see everybody win. I hate to hear people messaging me that they gave their gains back, or they ventured and they screwed up, or their ego's too good, you know, to take an alert from their mentor. But again, I have nothing but love to everyone here. Okay, I want to hear more celebrations versus, oh, I fucked up, oh, I burned my account, oh, I took a loss, oh, I'm not doing so good. You know, I want to bring Uprise back to the way we always used to be, green, you know. But the thing is, we all need to work together in order to keep this consistency. Okay, in my life right now, I have a lot going on. So if I'm active, take advantage. You know, get on, try to be active. If I'm not active, be a little patient. I'm not trading on my own and disappearing from you guys. I really have a lot going on right now. So, but even though I have a lot going on, I'm still giving my time. I'm giving you guys quality plays where I'm not throwing 50 plays at you a day. I'm throwing 1 to 2 to 3 at it, you know, at most. And usually they all hit. Okay, yeah, sometimes we take a red play. It happens, it's part of trading, but it just shows a lot about the person's character. You know, a few people experienced one red day 3 weeks ago. One, not 2, not 3, 1 red day, and they're not active anymore. So trading is not for everybody. Okay, if you're annoyed because you're making small profits and then you want to go heavy just to make a big bang, you're going to give it all back. The market does not care about nobody's feelings. The market does not care if you have an issue going on or if your ego is too high or too small. Play by the rules. Don't FOMO. don't venture. If your mentor or anyone in the group that you like is on, try to follow them. Don't use them as your confirmation. Another big mistake I hear from a bunch of members in the group where they're like, oh, it's enough for me to see your confirmation and I could take my plays according to your confirmation. They get lucky on the good days, but on the bad days, they get hit. We want to be consistent. So guys, consistency over anything. I don't care. Anyone else have any questions about what we spoke? Anyone else want to add anything?
I have a question.
Go ahead.
Okay, so when SPY is about to reverse, okay, and you see it coming, when do you start to buy calls, for example, because it's going to reverse going up? When you see it holding for a little while, or from the top, you anticipate it. Do you anticipate it and then like go into the call options when like from the top as it's going down, or when it starts to stop?
When it starts to stop. I don't buy a falling knife. And if I ever go into a position that looks like it's a falling knife, I'm usually very light. I go in a little heavier when I see a little reversal or a big reversal coming. Sometimes it's just a scalp. Sometimes I go in for a minute. Sometimes I go in for 10 seconds. Sometimes I'll go in for, a big push. It all depends on what the market is presenting at that moment. So if you're trading, you got to stop what you're doing and focus on your charts. I'm sorry, I'm saying, hold on, let me just bring this guy in from the lobby. If you're taking a trade, make sure you're not working. Okay. And if you're not working, you took a trade, you see a good support. Yeah, we can hear you. You could take the trade. Understood?
These reversals are gifts.
Anyone else have any questions? Guys, come on, talk. Stop being
Yeah,
shy.
I jumped. I got disconnected. Sorry. So I was saying, how do I take? I have a hard time taking the plays when I'm at work, and I get the alerts on the phone, but I'm not in front of my computer at the house. Any advice on how I can go about, I don't know, being more active with the plays and the chat?
Just give me 1 second. Let me just get this.
Yeah.
Well, if you're at work, if I was at work and I wasn't in front of my computer, I would treat it as a lotto.
A lot of. Okay.
Even if I'm giving you a guarantee or a confirmation, or I'm telling you guys, it's coming, treat it as a lotto. Trading should not be done over the phone. Trading should be done over your computer, because if you're not in your computer, your execution time is not going to be the same. By the time you sell, I already sold and took my profits, and everyone else did. So please, if you're going to trade, you're going to go heavier, make sure you're on your computer. If you're not in your computer, treat it as a lotto. Go in with a small amount. If it hits, it hits. If it doesn't, you know what it is. So anyone else have anything to ask or to add?
You mentioned for any of the new traders or users that have joined, to let you know about setting up some time to set up Thinkorswim. I've been here for a while, but I think the furthest I've gone with you setting up Thinkorswim is adjusting the memory settings and the real-time codes.
Yeah.
But I don't think I don't know if there was anything more to adjust other than that, like any charts or Thinkorswim workspace what's that called? The TOS space setup or anything like that.
I have I have some basic setups that we've done in the seminar that I could provide with. Are you more into the options or equities?
Options right now.
Okay, so right now I have something more for equities. I'm
Okay.
gonna be working on something for options and giving it out very soon. Just be a little patient with me. In the meantime, like I said,
No
if
worries.
you're at work, don't take anything heavy. And if you
I'll
want to
just
be
focus. Mhm.
and if you want to be added to that new members list and join the sessions and go through the beginners stuff, just DM me and I'll add you into that little group. We have at least 14, 15 new people that we're going to be going through some sessions together and sending them some older Zoom recording sessions to catch up with certain things that we're doing, so they're not left behind. Because I don't want to waste time during trading hours. You know what I mean? I
Yeah.
want things to go smooth. Other than that,
Okay.
is there anyone else that have any question about anything that they want to look at? Maybe another ticker? No, everybody's good?
Oh, Yossi, I have a question. Let's say
Yes.
when you're in a play, right? And you
Yes.
went in with one contract and you say to trim, right? What do? You trim, meaning that you just close the position, you sell it, or instead of one contract, you go in with the two, and then when you say trim, you just, I guess, sell one contract and have one running.
Okay. So, like I said, it all comes down in the end of the day to risk management. If you have a $3,000 account, split it into three different thousands, 1,000, 1,000, 1,000. Okay. Start a position with one contract. If I put a stop loss on that contract, don't be scared to buy the dips. But don't just sit there and buy every dip, obviously. You know what I mean? If it's at $1.50, you started one, it goes to 170. I say trim, you only have one. So trim, take the $20.
And then you start again?
Comes back down again towards the stop loss. You see me adding again? Add a little heavier. Add now 3. Or
Okay.
add 4. You have some money that you secured earlier that you don't care to go against it. But don't go in right away with 4 or 5. Go in with 1 or 2.
Yeah, I usually go with one. It's just that
You
when
see
you
it
say
comes
trim,
it comes lower towards the stop loss area. You see the chart making a reversal. You see Yossi and Sam or anybody in the community that giving you that confidence that, hey, it's coming, it's this, it's that. It needs to hold, or watch the bigger chart, make sure it goes over a certain section. If it goes over the VWAP, I'm buying more. You don't always have to wait for a certain average to buy. We just use these averages for places on the chart. So if I'm giving you a 99-cent stop loss, it doesn't mean it's 99 cents. It just means look at that area of support. I'll give you an example. The same chart I posted here before, I'll show you again. So let's say here I put $1.20, whatever it may be, average, and I'm putting a 88 stop loss. Okay. If you're going to put a physical stop loss, you're going to get stopped out. But if you are going in light, you're coming down here, you see it's holding, you can add some more here. It doesn't mean it's the end of the world. At some point, it's going to reverse. If you see SPY and the bigger picture is coming for a reverse, don't be shy. Add some more, take some profits, add some more, take some profits, add some more. Profits, add more. You see, I even have a line right here. I remember adding here on this support. And I took it all the way up.
How long
Okay.
do you consider something holding? What's like, sometimes I can't figure out when it's holding and when it's not holding.
Very easy. You just got to look at your supports and resistance. For day trading, I like to use the 15 minutes. Okay, the 15-minute gives me a bigger confirmation. 5-minute, I like to look at the momentums of the 5-minute. 3 minutes, I like to use for my entries. 1 minute is just going to give me a heart attack. You know what I mean? Use the 1 minute, but don't focus on the 1 minute. Use it to help you understand what's going on in this section. Because the 5-minute doesn't look like this. Look, I'll put the line right here. Let's look how that 5-minute looks. Look, this is the one. This is the 1 minute. See the 1 minute? Now look at the 5-minute, for instance. See how much of a less anxiety it is, and it's just clearly showing you a nice push up, hold up on the VWAP, and boom, breakout. Like, it's so simple. Versus, let me focus on the 1 minute. It looks like we're crashing, and in reality, it's reversing on you.
What did you say use the 15-minute for again?
15-minute, I use it for my intraday. I get a bigger picture with my 15 minutes. Okay. 30-minute and an hour gives me a solid confirmation over the 15. So if the 15 looks a little weird for me, I'm always going to use the 30-minute. The 1 hour, I like to use for a full day, or I would say Godzilla candles like this. Okay. 4 hours, I like to see it for volatility reasons. This candle in the morning was all the way here in red, but then it started to wick back up. So I used the bigger picture to help me see where the market's going. In the beginning, a candle becomes like this. But on the smaller time frames, when they're reversals, the actual candle starts to wick up like this. Starts to wick up, up. And it just turns green on the way up. If you're new, you got to look at candlesticks. You got to learn how candlesticks work, so you can understand what I'm talking about. If you're more than a beginner, you should already know what I'm talking about. If you still don't understand candles, I highly recommend you to be more active on the market as it's running, because you'll be able to see the candles more clear when the market is live. It's not easy to see the market when it's just idling. Let me look at the weekly chart real quick. The weekly chart looks like a lot of consolidations going on here. And I'm not so crazy, even though I know it's setting up for a nice break on the uptrend. But this green line right here, which is that 413 line, is a very big resistance, and it keeps resisting it. So I'm not so crazy about it. Any other questions, guys? It's getting late for me. I need to go. So I'm going to give room for at least 2 more questions. Anybody? Nope. Okay. Are those dotted lines support resistance? Yes. Those are my actual support and resistance. And I give these charts to my 1-on-1 students. They all have these charts already. So it helps them understand where the market's headed. Other than that, I'll see you guys tomorrow. And please don't forget, it's very important that everyone becomes a little bit more active. I'm not asking for too much. I just don't want to feel like I'm talking to myself. If I'm throwing a trade, react, let me know you took it. Doesn't hurt. If I see you took it, if I see so many reactions coming in, I'm gonna get that sense of, hey, you know what? There's not just 10 people, it's more. Let me guide them on another trade. Let me give them a little bit more precise information. It's gonna make me feel a little bit more responsible rather than just carrying 2-3 people around me. Okay, so in the trade chat, don't be shy. Okay, no one's gonna bite you if you say hello. No one's gonna bite you if you ask a question. I noticed that most of you are very shy. People tend to ask questions through DMs instead of in the open. Okay, no one's gonna hurt you. Ask questions, be involved. If someone is asking something in the trade chat and I'm not around, please be kind enough and respond. I've seen so many times where people ask a question, no one's responding. Now, reflect back on the beginning days when you started. Most of you who are here long enough, you guys used to ask tons of questions in the beginning. Okay, so when any new member comes in and anyone is asking questions, please don't give them that cold shoulder. You know, make them feel welcome, just like we made you feel welcome when you started. Okay, other than that, I want to wish everyone an amazing evening, and I'll see you guys tomorrow, God willing.
Have a good night.
Thank you. See ya.